Hey everybody, Chuck Barone. Friday, June the 9th, 2023. Let's wrap up a wacky week here. I gotta say I'm glad it's Friday. I'm looking forward to this weekend. I'm feeling a little burnt around the edges, man. It'll be nice to get some time to rest and refresh, so they say. But before we get into all this stuff here today, let me welcome everybody to the show. Thank you guys for your support. We appreciate you guys watching these videos and supporting the show every day. It keeps us going here. We appreciate you guys. All right, so let's look at this market today. Really not a surprise to anybody who watched the show yesterday. I kind of little bit of an idea that this market today would be pretty much just a blah nothing market, and it was. Everybody waiting now with bated breath to see what's going to happen early next week. As we all know, the Federal Reserve will be having their open market committee meeting on Monday and Tuesday, making their announcement on Wednesday along with Powell's presser. On Tuesday, we'll also get the CPI report. So all of those things coming together at the beginning of the week, causing everybody today to just take a little bit of a breath. And now we're going to wait and see what happens early next week. So as a result, the markets today, not much happening. Stocks up small. The Dow up 43 points to 33,876. The S&P up 4 points, 4298. The NASDAQ up 20 points, 13,259. So even though all the markets were up, they just weren't up very much. So really a big nothing burger for stocks today. Bond market, a little bit of a sell-off. Not much though, not much really happening in bonds either. Yields up small today. The 10-year up 3 basis points. The 10-year at 3.74%. The 2-year up 7 basis points. A little bit bigger jump for the 2-year. 4.59% on the 2-year Treasury. So we still have that inversion. Still warning of recession to come. Has been for a while now, but we haven't seen that recession. The inversion's still there. Not a lot of action in bonds. The dollar today, not much happening. The dollar up small as well. 103.57 on the index. Nothing happening in the dollar. Gold today and silver mixed, with gold falling $4.20. $1,960.40 for an ounce of silver or ounce of gold. Silver up 4 cents per ounce today. $24.27 for an ounce of silver. So gold and silver sitting right where they should be right now, right in the pocket. You'll see gold 2,000, silver 25 again, and leaving those numbers behind now, just like leaving, $10 silver and, $1,000 gold behind. Oil today down small, down 90 cents per barrel, $70.39 for a barrel of West Texas Intermediate. So it's sitting right at the bottom of that trough between 70 and 75. As I've been telling you guys, the trend in oil is certainly not up, it's down. Even with OPEC and Saudi's cuts, the oil market not really responding to those cuts. I think the cuts actually showing a little bit of, not desperation, concern on the prices, figuring that they would get their usual spike when they announce a cut. Didn't happen this time. Bitcoin today to finish out the week, another small down day, down $176, 26,452 for Bitcoin, holding its own, man. In spite of a lot of bad news in the crypto markets, Bitcoin hanging right on in there. So, way to go, Bitcoin. So there's the markets in a nutshell. Not much happening. I think Monday will probably be another quiet day in the markets. Tuesday we'll start, I'm sure there'll be some people starting to spread their bets around for how the Fed's going to play this on Wednesday, making some bets on what they think CPI will turn out to be. It's going to be a fascinating week next week. Much more activity than we had this week. So news you guys need today. It's just some stuff I want to share with you guys. Not much data today. One piece of data we did get, though, was the consumer credit. Americans, yay America, the American consumer right now sitting on the brink of $1 trillion in credit card debt. $9.88 billion. So just moving up just a little bit, but any second now going to cross that $1 trillion. Of course, the number this month is a record already, 1 trillion would be a massive record. Credit card debt now above pre-pandemic levels. So all the credit card debt that people paid off with their stimulus checks, during the pandemic, now been added right back onto those credit cards. The average American, and this is across the whole U.S., the average American carrying $5,733 in credit card debt. So the average balance on each credit card is about $7,500. Interest rates on credit cards also rising with those balances. The average credit card rate now above 20%. Above 20%. Last year at this time it was just under 16%. So that's a pretty big jump in the amount of interest they're charging. It's funny because back in the day, charging interest rates that high would have been considered usury and against the law. So it's really interesting that that's acceptable now, and the average American is okay paying 20% interest on their $5,733. So I get $1,000, more than $1,000 of interest on a very small credit card debt like that. It's just obnoxious, and more reason to do what we've been, try to do what we've been telling you guys to do. Get out of these credit card debts, pay those off, even if it's $10 at a time. Try to chip away at that. Do everything you can not to add new debt on there. This is the trap now, guys. This is the game. The debt trap, the debt slavery, the slavery to payments, where basically you work, and instead of doing something great for yourself at the end of the week, you do pay bills. And when you're done paying bills, you look at what's left there, and guess what? Now you got to figure out how you're going to get through the week with gas and food and amuse yourself and maybe go on a date with your wife or your girlfriend or whatever it is. Crazy stuff, guys. I'm telling you, I know saving money is not a way to get rich, okay? Hard to save your way to wealth. You have to invest. You have to do some smart things with your money. But saving money is the start of the whole process. You can't very well invest any money if you haven't saved any. So it starts with saving. Get used to that, guys. Get used to living beneath your means. Because if you can do that, you're already rich, number one. Because you don't need every penny you earn just to survive. In my mind, you're already if not rich, at least in abundance where you have more than you need, right? That's the first place you want to get. That's the first step to building wealth. You're doing that. If you've been doing that, a lot of this stuff we talk about and all this inflation and everything else is certainly not affecting you as much as it is a lot of the people out there, the people that don't even have $400 put away to cover an emergency. Now, let's talk about next week for a second. We know we're going to get that CPI number coming on Tuesday. That is going to be a very, very big event. I believe we could get a disappointing, not bad, but disappointing CPI number next week. The reason I'm thinking that is, rent and housing costs are a really big part of how they compute CPI, but they tend to lag, by quite a bit. So I think that when these big increases in real estate start catching up with CPI, we're going to see some difficulty there. Now, it's interesting because the way CPI's moved, the top line number, the headline number, has come all the way down from 9 to below 5%. So it looks like the Fed really making some headway, at least bringing down the number at the top, right? But if you throw out food and energy and you go to the core inflation, that's really been where the problem is. Core inflation has been between 5 and 7% for the past 12 months. So Tuesday, when you hear the CPI number, don't look, the top line number, the headline number is not the one we want to look at, guys. It's that core number. If we get a core number that's still in that 5%, 5 to 7% range, or a number that's spiked up from the last time we got CPI, or just some kind of anomaly, I think all bets are off on this Fed pause. And you could see the Fed come and raise rates then on Wednesday by a quarter point. Powell actually on the record talking about this core inflation. The phrase he used, and I like this, was called stubbornly sideways, meaning it's not going up, it's not going down, it's just staying in that, just like the oil prices, staying in that pocket, and they can't break it down, get it out of that pocket. So CPI next week, a very, very, very significant number, at least the core CPI. And this next thing I want to talk about just for a second has nothing to do with finance or Wall Street or your money. I just want us to talk about a little bit about our friends in China and some of the stuff they're doing here. It seems to me like China now has decided that, we've been pretty much shouting it from the rooftops that they are our number one adversary now. And it looks like China's starting to take us seriously and responding to those things. So you look at this stuff now. Today I was reading right in the Wall Street Journal, man. Right, the Wall Street Journal front page here, right? China plans spy base in Cuba. So Cuba, our neighbor 90 miles to the south of Florida, really hurting for money. We have broken off our relations with them. So instead of helping them and rebuilding them and, figuring it out how to get along with them, we've turned a cold shoulder to them, opening the door for now China to come in with their money and their billions of dollars they're going to give the Cuban government. And they're going to set up a big-ass spy base to spy on Americans from 90 miles away, guys. Now, there's a lot of military installations in the south and the southeast. China's going to have access to spy on all that stuff now. China has been increasingly aggressive. If you look at it, okay, what have they been doing? Big presence in the Middle East. They made the peace deal between Saudis and Iran. They're trying to put this peace initiative together with Russia and Ukraine, even though it's not even close to being workable yet. Of course, they're backing the Russians and the Iranians. They have a gigantic military buildup going on right now. We know how much of a threat they are to Taiwan and how much they want to take Taiwan back. They've been buzzing our planes and ships. I talked about this last week. One of their ships came within yards of one of our destroyers. They've been buzzing our planes for a long time. Not new news there, right? Spy balloons over the U.S., really? They own trillions of dollars of our debt. A giant portion of our manufacturing is already there in China. Guys, we need to make some adjustments if they really, truly are our adversary in more than just business. And it certainly looks like that's the way they're behaving. I was reading an interesting article today about some war games they played about what would happen if China really did invade Taiwan and how it would go. It was not happy news for the U.S. and its military, guys. You can go find these stories, look around, and they're pretty easy to find. But apparently, the U.S. doesn't do so great in these simulated war games. China, apparently, when they make their move on Taiwan, simultaneously start taking out our bases where all of our planes and our munitions are. So it's war. They're taking us seriously. We promised them to defend Taiwan. So this is some stuff that's getting pretty sticky here. We've already spending, a lot of money on fighting this war in the Ukraine, even though it's a proxy war. We really got the guts for this now, guys. It's going to be fascinating to watch, man. Geopolitical stuff, always a huge play, huge thing on what's going to be happening in this world. So now this rivalry getting more intense, something to keep an eye on, and I will be doing that for all of you guys watching. Anyway, that's it for the week, guys. I have a little bit of news about household incomes or household net worth going up. We'll talk about that on Monday. I'm already rambling on here for too long today. So go forth, have an awesome weekend. I fully intend to. Get some rest, get away from all this stuff for a few days. We'll be back on Monday. We know we got a big week coming next week. We're going to be here to bring you guys all the details. If you like what you're hearing, of course, I ask please hit the like button. It certainly changes the algorithms, gets our video in front of a lot more people, so maybe we can pick up some additional subscribers. Ask your questions in the comments section. We'll be back on Monday to bring you the news you need, guys. Until then, have a great weekend. Go Knights.